Have you ever pondered the tax implications of choosing between an LLC and an S corporation for your business? It's a question that may not keep you up at night, but it's one that could have a significant impact on your bottom line. You see, when it comes to taxes, not all business structures are created equal. Consider this. In a sole proprietorship or a standard partnership, the net income of the business is subject to self-employment taxes. But what if I told you there's a way to potentially reduce the amount of these taxes? Well, that's where the S corporation comes in. By electing to be treated as an S corporation, a business owner can become an employee of their own company and pay themselves a reasonable salary. The salary is subject to FICA taxes, but profits above the salary are not subject to Social Security and Medicare taxes. Let's dive into the tax implications of both LLC and S corporation to make an informed decision. A limited liability company, or LLC, offers certain tax benefits that can be particularly attractive for small businesses and startups. But let's dive a little deeper into what that actually means. When it comes to taxes, an LLC is considered a pass-through entity. This means that the profits and losses of the business pass directly through to the owner or owners who report this information on their personal income tax returns. One of the key tax implications for an LLC is the self-employment tax. This tax covers contributions to Social Security and Medicare, and as of April 2023, the self-employment tax rate is 15.3%. This is split into 12.4% for Social Security and 2.9% for Medicare. For an LLC, the entire net income of the business is subject to these self-employment taxes. This is because the owner of an LLC is considered self-employed. So, if we take a hypothetical LLC with a net income of $100,000, the self-employment tax would be $15,300. In addition to self-employment taxes, the net income of the LLC is also subject to federal income taxes at the owner's tax rate. However, it's worth noting that in some states like Texas, there is no state income tax, so there wouldn't be any state income tax liability. Another important tax consideration for LLC owners is health insurance. Self-employed individuals can deduct 100% of their health insurance premiums, which can be a considerable benefit. Lastly, if the net income of the LLC exceeds certain thresholds, there may be an additional 0.9% Medicare tax. This is something to keep in mind as your business grows and profits increase. So that's the tax scenario for an LLC. But how does it compare to an S corporation? Let's find out in the next scene. An S corporation, on the other hand, has a different tax structure. It's a unique entity that allows the business owner to become an employee of their own company and pay themselves a reasonable salary. This salary is subject to FICA taxes, with both the employer and employee each paying 7.65%. The interesting part is that any profits above this salary, which are distributed as dividends, are not subject to Social Security and Medicare taxes. This tax structure can result in significant savings, especially for high-earning businesses. But a word of caution here. The IRS is keen on ensuring that the salary paid is reasonable for the work performed, to prevent any misuse of the system. Now let's break down the tax implications of an S corporation. First, we have the reasonable salary, which we already discussed. Next are the dividend distributions. This is the income distributed as dividends after the salary has been deducted, and they are not subject to Social Security and Medicare taxes. Income taxes are another factor to consider. Both the salary and the dividend distributions are subject to federal income taxes at the owner's tax rate. And as we're talking about a hypothetical business in Texas, there won't be any state income tax. Lastly, the deductibility of health insurance can be a bit complex in the case of an S corporation. If the owner is an employee, the deductibility can sometimes be less beneficial than for a self-employed individual. Now let's illustrate this with a simplified numerical example. Assume the net income for our hypothetical S corporation is $100,000 after expenses, and that a reasonable salary for the owner would be $50,000. In this case, the FICA taxes on the salary would amount to 7.65% of $50,000. The remaining $50,000, distributed as dividends, would not be subject to Social Security and Medicare taxes. Now that we've examined the tax implications of both LLC and S corporation, let's summarize what we've learned. Comparing LLCs and S corporations can help you decide which business structure is more tax efficient for your situation. Let's delve into the specifics. In an LLC, taxed as a sole proprietorship or partnership. The entire net income is subject to self-employment taxes, which currently stand at 15.3%. This covers Social Security at 12.4% and Medicare at 2.9%. On top of this, the net income is also subject to federal income taxes at the owner's tax rate. However, self-employed individuals can deduct 100% of their health insurance premiums. If the net income exceeds certain thresholds, an additional 0.9% Medicare tax may apply. Now let's contrast this with an S corporation. Here the owner becomes an employee and pays themselves a reasonable salary, subject to FICA taxes. Both the employer and the employee pay 7.65% each. Any profits above this salary, distributed as dividends, are not subject to Social Security and Medicare taxes. This can lead to significant tax savings, especially for high-earning businesses. However, the salary must be reasonable for the work performed, as the IRS monitors this to prevent system abuse. Like the LLC, both the salary and dividend distributions of an S corporation are subject to federal income taxes at the owner's tax rate. The deductibility of health insurance can be more complex and sometimes less beneficial than for a self-employed individual. Just to illustrate, let's assume a net income of $100,000 for both an LLC and an S corporation, with a reasonable salary of $50,000 for the S corporation owner. The LLC would pay self-employment taxes of $15,300, while the S corporation would only pay FICA taxes on the $50,000 salary. So as we can see, the potential for tax savings with an S corporation is significant. However, remember, the right choice depends on your unique business situation and goals. Consult with a tax professional to make the best decision for your business. In the previous scene, we've compared the tax implications of an LLC and an S corporation. Now let's put this into perspective with some practical examples. Imagine two businesses. One is a small, home-based LLC, and the other is a thriving S corporation with multiple employees. For the LLC, the simplicity and flexibility of its structure might be more advantageous, even if it means potentially higher taxes. For the S corporation, the opportunity to save on Social Security and Medicare taxes can be significant, especially for high-earning businesses. Remember, the right choice depends on your unique business situation and goals. Consult with a tax professional to make the best decision for your business. We hope this video has been helpful in understanding the basics of LLCs and S corporations. There's a lot more to learn, and that's why we've prepared a special offer for you. If you click the link in the description below, you'll get access to a free masterclass where we'll show you practically how a business can save up to 40% in Social Security and Medicare taxes. This is a golden opportunity to learn from experts in the field and take your business to the next level. Don't miss out. Thank you for watching. If you found this video useful, please give it a thumbs up and share it with your fellow entrepreneurs. Remember, knowledge is power, and we're here to help you harness it. Until next time.